Hey, good afternoon, everyone. Welcome to Short Verticals. I'm Brett Krause. Good to have you back for another week of looking at what's going on in the market and seeing if we can apply some of the strategy from Short Verticals with some of the stocks out there, with whatever movement they're making. And so we're going to get right into that. Just want to welcome everyone aboard. Gosh, we got Paul and Marquise and Speak Truth and Will. How you doing, Cecil? Alfred, you have many others. Thank you for joining me. And Cameron May joining us on the chat. So please, if you have any questions that I'm not addressing or just some side notes or something, please put them in the chat. Let Cameron help you out. He does a fantastic job at taking care of that chat. All right. We got a lot to go over today. I have a ton of stocks that, I was thinking today maybe we'd go over some searches and stuff, but no, I'm just going to get right into a whole bunch of stocks and we'll save the search for another week. But before I get into that, let me cover a couple disclosures with you real quick. Do remember that options do carry a high level of risk and are not suitable for all investors. The information here is for general informational purposes only, should not be considered as an individualized recommendation. Examples do not take into consideration transaction fees, taxes, and considerations like that. Paper money is for educational purposes only. Short options can be assigned at any time, regardless of the in, at, or out of the money status. Investing does involve risk, including the loss of principal, and past performance is no guarantee of future results. And lastly, there's a couple of disclosures on other items along with the option Greeks, delta, gamma, beta, theta definitions. And one other thing I want to say is stop losses are not guaranteed to execute at or near the activation price. So keep that in mind. All right. So let's go ahead and bring up our Thinkorswim and take a look at, first off, I want to look at what's going on in the overall market, all right? So we're taking a look at the SPX. And the reason I bring this up is because you can see the SPX is starting to form or maybe possibly even breaking out and creating a symmetrical triangle. Now, this is important because if the symmetrical triangle does come to fruition, as it sits right now, it's looking like it's possibly going to break to the upside, then that would suggest from a technical standpoint, more upside potential. All right. In fact, let me back out and just kind of pan out here and just explain this a little bit more in detail. And so let me pull down our RSI here. Okay, so what happens, generally speaking, is when it goes into a symmetrical triangle, usually that's a consolidation, a breather, just kind of a lull in the overall run, almost like it's taking a break. And so, from a technical standpoint, it's often said that that's a halfway point. And so, the run like this could be a halfway. So once it balances and breaks out, if in fact it does, it could potentially do this again. Now, of course, it could take time, and this run that it had was very quick. I mean, that's unusually fast, and so it would be very surprising to see it do at that same speed. But basically, it's kind of like this. It comes down. We're looking for it to break out of there and run higher, and obviously, we're going up there quite a ways. But that's kind of the idea. Now, very rarely will it run directly up, almost like this did, with only a few days of downward action. Typically speaking, a little bit more up and down. But that's kind of the idea, is that if it breaks out the upside, that was a consolidation, just a breather in the overall upward trend, and it would resume the upward trend. But first, before we even get there, it actually needs to break out. And like I was saying, we don't know if it will or not. Now, right now, it's looking like there's some potential. Of course, where you draw the resistance level could also impact if you're saying it's breaking out or not. I actually may have had that even just a little bit high. So quite honestly, maybe if we're pulling those off, a lot of those closes and stuff and some of the touches there, we might have something a little more like this. And yet it's still above that. Now, note, a couple days ago, it was also above it. It looked like it was possibly breaking out. At some point during the day, it was up here looking like it was going to make that break. And it did, in fact, come down and close below the resistance and then drop back down. But now we had a drop back down to this moving average, a 50-period moving average, a hammer formation. It's a pretty strong hammer. And then confirmation of the hammer and looking to make that breakout. So that's where we're sitting right now. And so why does it matter if the SPX breaks out? Because if the XPX breaks out, then typically speaking, stocks would follow in suit, right? I mean, it's kind of made up with a lot of the stocks out there. Let's also check out like the NDX, and we'll just see here. This one maybe has not broken out, but you'll see the same kind of consolidation, the same sort of triangular formation. And let's see if we can draw some lines in here. Let's see, this is what we want. We don't want to do it here. I almost did that. And so don't make that mistake. Be very careful about that. And the reason why, I mean, it's so tempting because we are looking for, kind of the high points, right? And this looks like a high point. However, this is not a point. This is just where the car is on the road. We're looking for where the car turns around at an S curve. And this is just a car going along, but we don't know where it's going to turn. And so that's not an endpoint yet. And so that would be our resistance, the support coming across in here. We're looking for something like this, and that's what we're seeing on the NDX. All right. And so again, a similar formation, but hasn't quite broken out to the upside yet, or the downside for that matter, just kind of bouncing around in there. And then $ DJI, one up the Dow real quick. And what we're going to see here is we're not going to see the same consolidation, right? We didn't see that flag pattern or any sort of a triangle, symmetrical triangle. It's really just kind of working its way on up, maybe a slight pullback and a possible test of some sort of there's not really a good support level in there. I mean, a little bit of a hiccup here, but it's very weak from a technical standpoint, but looking for potential bounce and heading higher. All right. But still, we're saying is bullish on the Dow, bouncing and bullish up on the NDX, and looking to be bullish, even more bullish on the SPX from a technical standpoint. So therefore, it's leaving us with more of a bullish outlook. And as we go look at stocks, then we're looking for more bullish plays rather than bearish plays. Okay. Let's see, just make sure I'm not missing anything on the chats in here. Again, a lot more sharing. How you doing? Ricebird, good to have you. Kevin, good to have you. All right. Michael, yes. Richard, how you doing? Good to have you all aboard. Okay, so now what I want to show you though is when we see the market kind of doing some consolidation like that, that's, it's not like it's the only thing. There's often a lot of stocks that follow suit. And so for instance, we look at Altria Group and we'll see a very similar kind of construction where you can see the triangular symmetrical triangle that's going in, it's still winding up. Now, this one's looking for the break, hasn't done it yet. Will it break the upside? We don't know. And it's be careful to, play it too early. We're looking for it either to come back and bounce. I mean, it is heading down right now, and see if it will bounce another time and then go to the breakout. Careful about these going too long as well. Like, this still has a ways to go to get the apex, but if they go over about 2/3 of the distance, even 3/4 maybe, if we're getting a little on the long side, more than 3/4 of the way from the beginning to the apex, then from a technical standpoint, it'd say it starts to lose validity, right? It shouldn't go all the way to the end point of the pattern itself. It should break out before then. But so nothing actually to do there, but I just wanted to bring that up, that we're seeing that kind of a similar pattern play out. How about ANET? ANET, A-N-E-T. Are we seeing it there as well? Yeah, we are. All right. And so there was the resistance coming down here. Here's support come across up here. You can see it winding up. And then there's a breakout. Now, that was a very solid breakout, right? Nice breakout in the middle of the candle there, adding more validity to the idea that is support and resistance. We could actually almost add, some sort of a horizontal zone in here. A lot of times I draw it with a horizontal line, but we know that support and resistance is a basic area. Maybe it's just a little bit high. Let me do this. I'm going to activate this and pull it down. Let's do the rectangle and pull that down just a hair. But generally speaking, it's kind of like in this area, right? This is kind of be our resistance area up in here. You can see that's about the middle of that candle. So we've got a breakout here, a little bit of a pullback, and sometimes this can give us a little bit of an opportunity to potentially catch it again. And so, like I said, we've got a lot of stocks to play. Let's go ahead and look and see what we can do with this one. Now, there is an earnings announcement coming up, and we're going to talk about that probably more next week. I want to walk through just some searches and stuff like that, and how do we take into account some of those earnings, because they will become more and more of a concern as we get further into the earnings seasons, which is just starting up. But when is that one? Let me get my cursor over that again. What are we talking about? 8/4. Okay, so August 4th. So we have just a little under a month to do that. So let's go out to the trade tab. What are we looking at? We got support somewhere around this one. We'll just say 175-ish. So let's go out to trade tab. We're going to look at ANET. I'm going to go out to, what do we have here? We have 22 days till July 31st. That's possibly 29, August 7th. When was that earnings announcement? The 4th? August 4th. I wonder if we can squeeze something out the week before. Let's try July 31st. Let's see if we can get out a week before and see if we can get any this one won't see. So generally speaking, what I'm talking about here is what we'll often see is as it gets close to that earnings announcement, we'll see the implied volatility starting to rise. And that's not what we want as option sellers. We want to see the implied volatility drop, because that will reduce the value and allow us to buy it back at a cheaper rate, right? Well, when you have implied volatility rising going into that earnings announcement, well, that would keep it elevated generally speaking, more so than we'd see otherwise. And so in order to avoid that, we're going to just see if we can get out just a week earlier. And if you can see over here, if this is looking at the implied volatility for the expiration cycle, and here, the one that incorporates the right here, the one that incorporates the earnings announcement is much higher, is 10 points higher than the one that doesn't, right? You see that? And so we're going to go with the one just before that. All right. All right. So let me get rid of that. So let's check this out. Let's see what we can do. And then if we're looking for have some delta, we're going to use that as a proxy for the probability of expiring in the money. And so obviously the inverse, that would be the out of the money, meaning this would be a delta of 30. We're going to use that as a proxy saying it's roughly a 30% probability of expiring in the money, or inversely a 70% probability of being out of the money. Now, on that, let's see. Let's go a little bit higher than that. I wonder if we can get even a 175. That's 175 is where that support was, roughly speaking. Let's see if there's enough money. We're gonna go ahead and sell this 175, and then we're gonna come down just below that and buy. Let's go 5 wide on this and see what we can do here. So let's try to buy that 170 and see what that does for us. Oh, not bad. 175 credit. Okay, that's nice. Nice tight bid-ask spreads too. And so, paper money will feel pretty much anything, but live accounts don't tend to do it as much, right? You need a little tighter bid-ask spread to make that happen, especially if we're sitting here at the mid. But that's actually looking fairly good as far as, tight bid-ask spread. This isn't like a huge wide. Sometimes you'll see it's like $2 is the mid and negative 30 cents is the natural. And you're like, okay, that's never going to feel right. But this one is looking pretty good in that sense. So just checking this out real quick. Let's look at this. Let me pull this up. And so what are we getting here? So we're selling the 175. We're bringing in some money for that. We're going to buy the 170 as a protection. So we're taking some of that money that we sold. So on that, we sold the 175 for about $7. We brought that in, but we're taking about $5.50 out of that, roughly speaking, to buy the 170. So that leaves us here with a net credit of $1.75. But we have that $5 risk on there. So the $5 minus the 175 that we'd keep if everything went south is a risk of $325 per contract. Okay. And so, yeah, 175, the gain divided by the 325 risk is going to give us a 53%, 54% return on risk there. And so our numbers are shaping up. And let's just look at this real quick also on the Analyze tab. I think it's always valuable. Check that out, make sure we understand what's going on here. So I'm going to bring up the Analyze tab. Let me hide the price slices here for just a second. I want to go over to the 3 lines over here and drop that down and set slices to break even on April 1st, which is the Saturday after these expire, all right? And so what we see here is, here's our probability. Just to break even, we got basically about a 60%. I know it's really faint, but up in here you can kind of see 60.46%. That's the probability as it sits at this moment that would be above this break-even line at expiration and about a 40% below that, all right? Now, as we get, obviously, if things move in our direction, the price action climbs, it'll change that. So for instance, if price action comes up here and we get closer to expiration, so let's see if we take this, well, I need to take it this way. Take this closer to expiration, we'll see this gray area shrink. Then what happens is probabilities start changing, right? So we get that moving in our favor. So let's see. Let me do it this way. Let me just take off wings. I want to show it just with the single. Well, this line's in the way. Anyhow, here's what I'm going to leave it at is basically as the further away the further it moves up, the better our probability is going to be and the better we're going to look on that trade. So the trade, here's our max loss down here at 170. Here's our max gain at 175. Maybe I should pull this over a little bit more and kind of spread that out. The pink line is basically where we're making money at, at a certain time. Let me reset this, bring this back down to 7.9. And so basically, if this price action were to run up, like if it were to run up, let's just say to 190 today, then where we'd be is that position would be up $36. And so I can't quite hold both of them at the same time, but you can see 38.79 over there in the pink in the bottom left-hand corner. And, as the higher it goes, the more we make, $83 and whatnot. And so you can just kind of see how that goes as time goes on. All right, so it's always good though to understand this profit loss graph because that comes into play a lot more when you deal with more advanced option types. And also, some will just look at charts like this. They won't even look at the price chart. They'll just look at how these play out in probabilities. And so it's a whole other way of trading. So it's just good to learn that. All right. Let's go ahead and place this trade though. So let me go back to our trade tab. So we were talking about what was the risk on this? It was $325, right? So 325, we've been using $1,000 worth of risk per trade in this class. And so this particular trade has a per contract risk of 325. And if we do the math, we can do that in our head. That's going to be three contracts, 3.07. So let's make this three contracts. We'll go 1, 2, 3. So we'll sell 3, buy 3, and we'll leave the rest of it alone. We'll just go ahead with that 167 credit, hit confirm, bring this up, and we're going to be good to go, possibly making $500 profit, possible loss about $1,000. No other concerns to be looking at with red data or anything, so we'll send that off, and that should fill pretty quickly. There we go. What do we get it at? Say, that's exactly where it was, but what we're going to be looking at here now is, let's go ahead and put a box on this. So we need to be above 175. Let me get rid of this one, remove rectangle. So we need to be above 175. This is today. So right there's 175 by July 31st and somewhere up above this, right? So we need it to run up in this ballpark somewhere by the time we get to this is our expiration. Obviously, we want to be out a little bit before that. So there's one trade real quick that we just had to throw on that paper money account just as we're looking at those symmetrical triangles that are looking to break out and possibly heading higher. Now, kind of speaking of trades, I do want to go back and look at what happened from some of the ones we had last week. And it's not only charts, but actually let's look at the trade. Well, actually, let's look at some charts because I thought this was interesting. SNDK was one we looked at last week. Whoops, I missed that one. SNDK, CKDK. And last week, what we were talking about was right here. We were mentioning this was possibly coming back to support. And I noted we had some resistance here, some support here, saying watch for this to potentially come back and bounce. And it did. It came back, it bounced. In fact, we got a hammer here. I mean, this is more like a doji, right? This is like a butterfly, not a butterfly, a dragonfly. We're going to upgrade it to a dragonfly. And actually, I put together a whole bunch of really short videos that will explain these types of candlestick formations. And also, I'm going to set up a whole new series of just 3-minute videos on price patterns. In fact, let me share with you this real quick. And so if you go to our homepage on our Trader Talk YouTube page, so let's just go home right here. Come on. Then what you'll see is, just a whole bunch of videos that we put out, right? Well, what I want to do is go to the shorts right here and click on shorts. And these are videos that are 3 minutes or less. And they're actually in the vertical format, so you can watch this on your phone, versus the horizontal landscape format. But this makes it easy to watch on your phone. And I have this one I put together yesterday, Understanding Price Pattern Basics. And so I covered some of the very, kind of the foundational components of what builds a price pattern. And then I'm going to go in and kind of break down each one of it, whether it be double top, double bottom, symmetrical triangle, ascending triangle, descending triangle, cup and handle, head and shoulders. I'll go through all of those in the upcoming weeks. But I did go over candlesticks, and in there I talked about a gravestone doji, as we were just mentioning here, or a dragonfly doji, I should say what we just mentioned. And so check those out. Give those a look. They go through a lot of information in a very, very short amount of time. Like I said, 3 minutes or less to get that, get through that. So here's the thing on SanDisk, I ran through the numbers, and it really doesn't offer up a good vertical trade. Just the value is just too low, and so we're not going to go ahead and place a trade. But I mean, it doesn't mean it won't work for some other type of trade, as we get kind of this bullish type setup. And so we maybe look at that for something else in another class, right? How about MU? That was another one that we looked at last week. Just saying, hey, are we getting any type of a technical setup for, anything bullish? And you can see in similar fashion, ran up. In fact, let me grab this ran up, hit resistance here, came down, ran up, came down, used that old resistance as new support, bounced off, it came up, came down, bounced in this general area, and off we go again. And so there's Micron doing a very similar thing to what we just saw on SanDisk, making that bounce, potential move higher from the support level. Let's see, I mentioned there's a bunch of them. It's about most of the things we covered last week. Let me pull up WDC. Now I'll address some of those questions you put in there. Look at this. So now this is a good one to bring up personality because stocks will have their own distinct personality. And this one you can see hugs this 50 period moving average. And some will hug a 50, some will hug a 30, some will hug a 20. They just will all have different personalities. In this one, you can tell it's a 50 right here. You can see the simple moving average 50. That's where we know it's a 50. But you can see bounce, 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 a little bit above it, which means the trend is getting stronger. Bounce. And so we're seeing that bounce off there. And not only that, we talked about this last week, but also looking at an indicator. And down here we have the RSI. You can see the 50, which is the midpoint on the RSI, can also act as an area of support and resistance. And that came down and bounced off that point as well. And so that aided, the analysis saying, okay, we're looking for it to bounce somewhere in this ballpark, and that's where it looks like it's bouncing and heading back up. And so another one that is potentially setting up some sort of bullish indication. Let's see what we got here. Pause, tendency survey. Oh, I got a survey. Hey, thank you, Cameron, for noting that. If you do see, go click on that link that's out there. Please click on that, fill that out. I actually read each one of them. And so, do us a favor if you would and fill out that survey. Nice to see someone else playing SPVs around the 21 DTE. Oh yeah, I got you, Paul. Haven't heard of a Dragonfly Doji before. Yeah, it's one of the lesser known indicators out there. And to get something, Dragonfly will help out. You maybe not have not heard of an abandoned baby. And so often when you have an abandoned baby candlestick formation, you need a Dragonfly to be part of that. And so, but check out those videos on it. Check out Abandoned Baby. Check out Dragonfly on those YouTube shorts. I go through what they are and what they mean. All right. Okay. WDC. I got a lot of these that we need to cover. AMD. AMD came down. Here's another example. Look at this, bouncing off the midway. Like this one didn't even pull back all the way back to that. This one doesn't have that same personality like we were talking about. And so this one, if I switch just to like a 30 or something, we might see a stock. In fact, let's just do that real quick. Edit that, and I'm going to move this stock to 30, or I could do a 20. Sometimes you just got to try it and just see. Now, I wouldn't go around just manipulating them all to make it work, but I just want to point out that stocks have personalities, and some will just tend to bounce off something more than another. Now you can see on that 30, it's a little bit more accurate, right? And so you can see it coming back and potentially bouncing off that, starting to head higher today. And with that, we do see it really adhering to that RSI right there at the 50%. And then some might wait for it to actually come back above this resistance line. Let me extend that to the right, as confirmation or more solid bounce off support. And so that could be something to look at as well. But in going down through the multiple charts that I have set up for you, this one's a little more on the bearish side. And so we talked about this one possibly coming back up, right? Look at this. We had the bear flag coming up, dropping down. It really didn't hold that resistance there. It broke through it, but still, this is a fairly textbook type bear flag. In fact, I'm going to throw a Fibonacci on there and say from this top down to this bottom, let's see how far it retraced. And it retraced about 2/3 or 1/3. So that's kind of the ballpark we want to see it is somewhere in here is 1/3 to half. And you can see it made it up to a third and then dropped down. Now this one, it's showing a little bit more life, and so that's a little bit more on the concerning end, but that's something that, depending on where that closes, could be a potential bearish plan. I have another one that I want to get to later on here that's on the bearish side. What's going on with BE? Now earlier today I was looking at this and it was looking a lot better. It was kind of doing its bounce, run back, bounce, run back, bounce, run back, and we had almost like another bounce. But in about an hour since I last looked at this thing's taken a little bit of a dive. But we'll see. Again, it's important to kind of see where they close. Are they going to close, as a bounce off those supports? Are they going to break the resistance, or are they going to give it up by the end of the day? STX. another one coming down. Let me draw in that horizontal support level, that old resistance here, or support here, potential support here. And you can see right in here, resistance, support, getting that bounce. This one came down a little bit lower, so there's a little bit more weakness in this as a potential bounce. But nonetheless, technically speaking, it is bouncing and heading higher. And so that's something else to, consider, potentially take a trade on the paper money. But there's just so many out there. And then, which one did we do? We did, oh yeah, I forgot I wanted to get back to the Apple. That's what it was. Um, it was ANET. Okay. And so one more, and then I want to look at Apple. Let's look at PANW. And this one, now check this one out. So this one had a run up. Here's a support. Let me actually delete this for a second. Then I want to walk you through this one. Move drawing in. So we had a support level here, ran up, came back, looking for a potential bounce here. Maybe a little, oh, you know what? Maybe I'm going to rethink this one. Oh, I just saw something that I didn't see before when I was kind of going through this. It's like, oh, hey, this is a potential play. And there is still possibilities, but what I see here is I was looking at a Fibonacci retracement. So looking for this to come back, bounce off this, 1/3 to 2/3 pullback or half pullback, and that's what we saw here is that potential bounce, right? Now again, it hasn't closed. These are very good candles from a bullish standpoint. One thing that's just a little concerning, and let me draw this out, is the divergence. You see the bearish divergence? So we have a peak here and a lower peak here. We have a peak here and a higher peak here. Let me move away these Fibonacci's. And so what this is indicating is we have price action going higher, but we have the momentum, the bullish momentum waning. Now, this does not mean it has to change trend. That's one of the biggest misconceptions I tend to see when I'm talking to people is like, oh, wow, there's a divergence. Look out, the trend is over. No, it's just typically indicating that it could be the trend is over, but it also is frequently used as simply saying, okay, it's peaking, it's ready to pull back to a support level. All right. But let's see what this one offers us. So we got, possibly bouncing around the 325, somewhere in that ballpark. That's almost where that old high was back in that area as well. Let's go ahead and draw a horizontal line across here. Maybe not quite, didn't make it quite that way down, but we were back on that 1/3 pullback. And so let's go ahead and hit the trade and see. We don't have any earnings coming up on this, do we? Ah, no, we're good. We're good. We got time. We got time. So this one we could possibly go out a little bit further if we wanted to try to get a little bit more time on there. Let's just go out. Let's go out a week later and just see what we can get on the August 7th, giving us 29 days till expiration. So 29 days till expiration. We're going to come over here to the delta column. Just make it real simple. We're looking for 30 to 40 days, generally speaking. That's just a general rule. We can always go outside that. But then we're going to look for a 30 to 40 delta, generally speaking. Again, we can go outside that, but that's where we're going to start. And actually we have a 325 right there when we were talking about our support. So maybe go a little bit lower if we want a little bit more probability. Let's just see what this offers. A little bit wider spreads here, but let's click on like the 320. We'll sell the 320. And then, that's a nice chunk of change, but we're going to use some of that $13 to buy the 315 and see what that does. We're going to hold down the control button, hit the ask there. And we got a 5 wide spread. This is very similar to the one we just did, right? With about $1.70 on the other one we did. And this was $1.77. So we're right in that same ballpark, aren't we? And our math is pretty much going to be the same, $5 difference, right? We're going to sell 320, buy the 315 as protection. And so the risk there is $5. But if it were to go south, we'd keep the $1.77. So the $5 minus the $1.77 is going to be our risk on the trade, which is 323. And again, that's going to go, our other one's 325, so it's going to go into 1,000 3 times, just a little bit more than that. If we take 1,000 divided by 323, it's probably going to be what, 3.0, 3.1? Yeah, just about 3.09. And so let's do 3 contracts on that. 1, 2, 3. Hopefully get $1.77 for that. Now, if we really wanted to be, want to say, I need $1.77 out of that, we could lock this and say, okay, I have to have that. And if we get it, we get it. If we don't, we don't, right? We can decide if we want to get that market order or, say, nope, I need that exact amount. Let's go ahead and hit confirm and send. Just make sure we're not getting any errors or warnings in there. Again, this is a little bit more. We're getting the 531 with potential risk of 969. Go ahead and send that one off. And then we'll see if that one gets filled. If it does get filled, what we're going to look for on that one is for it to be above the 320. So we're looking at around this ballpark right here. And that was August 7th, wasn't it? August, we're going to go out to August right about there. So here's the ballpark we're looking for price action to go into, is make a run up into that area. All right. Okay, so two trades. Now we still have more. We still have more. So 5 wide, I want $1.35 minimum. Okay. Yeah. Yeah, Paul. Just curious, why don't you focus more on the theta when selling a short option? Okay, so I am. What's happening here is we're kind of building in the theta. It's kind of going without being said. So what's happening is, as when we go and buy some, in fact, let me make sure I get these up here. Okay, got the theta up. All right, so we're looking at the money. The theta is going to be the highest at the money, right? And so we're getting this 34 cents is the most. So it's losing that 34 cents a day per share on that. But as we go away from, on either side, as we go away from the at the money, you can see they get smaller. So what's happening here is we were just selling. Oh, there we got filled. There it is. We were selling at 34 and we were buying at 32. And so that's actually going to almost negate that theta. We're going to get a little bit of theta out of that, but it's going to be a theta that's going to work in our direction, right? Since we actually sold this one, so we turned that in at negative into a positive, and we bought that one. So it's 34, a positive 34 minus a 2. So we're actually collecting the $2 difference on that, which, or 2 cents, which is $2 per contract. So, oh, actually, I'm off one. I'm 33, 320, but 1 cent. So what's going to happen here is as we get closer to expiration, this will start to pick up, and we'll see a lot more differential in these. And so, in fact, let's go something shorter here. Let's go to like this one that's 8 days away. And if we look at the 320, 315, we got a 57 right here. And we have the 315, a 53. You see how they're widening out? They're getting larger as far as discrepancy, and so that time decay will pick up and work in our favor. But anytime we're selling closer to out at the money and buying further away, that not any time, but theoretically, generally speaking, that will work out as a positive theta. So we're playing that theta. Theta changes with delta and volatility fast. It changes fast. It changes. Just curious. Let's see. Some short option. Okay. All right. I think I got it. I think I got it. We got it caught up there. Now, another thing though. Oh, you know what I want to look at? Another one. I'm going to take a little bit of a move away from. We're in fact talking about theta. Check this out. Check this out. So I was looking at Oracle, and Oracle's interesting. This one's pulling back. I'm still going to run this. Typically speaking, I'd love to see where this one ends the day. Now, earlier today when I was looking at this was way up here, is looking at like a pretty solid bounce off support. And this support level, this blue line, this trend line, has been around for a little bit. In fact, let me show you how long it's been around. I'm going to go out to a 10-year weekly. And so we have a lot of data that comprise this. And you can see this one started in, what is that, September of 2026, bounced off it again in March. And then bounced off it again a couple times earlier this year. And so we're looking at a potential bounce off the support level, right? And so it's down to that. So it's a very long-term support level. And when we also look down here at our RSI, it's looking to come back out of that reversal zone. Now, sometimes there can be a first time and a second time, meaning we'll get almost like that first time try, second time move. Like you'll see something like this area right here. You know, it took a dip and then it made a little bit more of a move right after that. But not always. Like this one didn't have a second dip and just ran. But what we're looking for here is a rally off this. And so now this is a pretty good potential move that it could make. I mean, even if it just ran back halfway up here, I mean, we're getting in the 200 level and we're starting here at 140 or something. So it's a big move. And generally speaking, the verticals don't take a huge advantage of a big move, right? I mean, if it does move, it can make its money, but I'm just saying it's not making more money because it goes further. It just maxes out. We're done. And so what I want to do here is I want to kind of compare and contrast some things. In fact, let's go ahead and look at what we could possibly do as far as a bullish short put vertical, and then I'm going to look at a long call vertical. Not part of this class, but I want to throw that on just kind of as an example here and how we can split that up to make it work, okay? So let's go in and look at, let's see, no earnings or anything. Got to make sure we're not missing anything. I don't see anything in, okay, we're good for a while here. Let's go to trade tab on this. And let's see, we need to get a little bit more than 8 days, right? Let's go back and see if we can find, let's go back to August 7th, somewhere around that, we're looking at 30 to 40 days. And so I'm going to look at the August 7th. Again, looking for that 30 to 40 delta as a starting point. Let's see here. I need to come up a little higher. 40, 39. Let me get a little aggressive on this one and go with that 39 delta. And so our return will be a little bit higher if it makes its move. And that's something we can also take into consideration. Like if we're expecting a big move and we're looking to get a little bit more out of that, we can be a little bit more aggressive and go closer to at the money. And so what happens is it'll give us a little bit more potential gain versus if we go deep or deeper out of the money. Uh, and so it's a one way to kind of trade a little probability for profitability. And so let's go ahead and look and see what that one will do. So we're going to go ahead and sell the 140, and then I'm going to come in and buy maybe the 135 or so. Come on, scroll. 140. Let's see what the 135 does. Okay, we have, 220. So see, this is, according to what we saw before, this is a lot heavier premium, right? We're potentially gaining 220 on a 5 wide spread. So that means our risk is 280. So 220 divided by the risk of 280, I mean, we're going to be a lot higher than we were looking on the other ones. And we're talking about 78, 79% return on risk, right? But what's the downside of this? Well, our probability isn't quite as high. It's not a lot less though. Um, so if our risk is 280, we're still only going to do 3 contracts on this. In fact, I'm only going to do one because I'm going to do something else on this. So we're just going to leave this at one. And I'm going to go ahead and by the way, if we want to analyze this, again, we're going to see that same setup as before. Where we have, here's our max loss. Somewhere in here, we're making some gain, and here's our max gain at the 140. So anything above that, we're making max profit on that. So let's go ahead and confirm and send this one off. But then I want to go ahead. I'm going to do these kind of quickly because I want to come back and share something else, okay? Because another thing that some might do is, what if we went to buy a call? Now again, we're looking at a potential bullish move here on the stock. And so we played the short put as a bullish play. If I were looking to do it with a call, then really what I need to do is either just buy a call outright or do a long call vertical. Now, if we were looking to play something bullish, looking for a move to make, maybe we buy something a little bit out of the money, saying, okay, if it runs, great. If not, I'm going to just walk away from this. And so let's look at something like the 155. We're going to need some love from the stock to do this. This stock can move quickly. Like even earlier today, it was the high on today. The high was about 150-ish, 149.07. So, this thing can move. The range, let me zoom in on this so we can see it just a little bit more clearly. The range today, $8, right? So, what's the possibility of it being, making a move over a couple days? It can definitely make a pretty good move if it's moving $6, $7, $8 a day. So let's go ahead and pick something a little bit out of the money. But in picking something out of the money, what we're going to have to be worried about, coming back to the earlier comment about theta, is this is where theta really becomes a concern. So I'm going to click on the ask here. And what we're going to see is if we buy one of these, it's going to cost 620. Let me see, 620, 155. All right, let's see what that does. 620, but I want to set this up a little bit differently. Let me do this. Let me take this into the Analyze tab because I want to show you the thetas because this is where it really gets important. So let's go in and pick. We're gonna actually go a little longer time frame too. I apologize good thing I came out here and looked at this. Let's give it a little bit more time so that we don't, because since theta is working against us, we want to give us a little bit more time on that. We're going to give it 43 days. So we were at the shorter end when we're selling. We're going to go at the longer end of that 30 to 40 days when we're buying. And let's go ahead and still look at something similar there, like the 155. Let's go ahead and buy this one. And then what's going to happen here is we're looking at quite a bit of theta or time decay. And so I'm going to come out here and just buy something way out of the money, or sell something rather way out of the money. And I want to show you how this might help with some of that time decay concern. In fact, we're gonna buy this for $8, but we're gonna bring in about $2.25. So on this 185, and so I'm gonna bring these two up. Now check this out. Let's go over to the risk profile and let's look at each of these legs on this. Oh, I put it together as one. Hold on. Got to do that a little differently. I need these to be able to show each leg. So let me go ahead and recreate this one more time. Buy that one. Got that one in there. Sell this one. There we go. That's what I need. Now let's go over to that risk profile. Okay, good. Now you can see this is exactly the same risk profile that we had on our short put. Why? Well, it is a vertical. It's a bullish vertical. And so it does have the same scenario as far as the risk profile looks. However, the numbers are quite different. Now, let me show you what's interesting about this. If I were to take this off and just look at this long call, look at this. I'm going to bring down price slices. This is saying it's losing $13 a day. All right, $13 a day on this long call. You know, and that's where those long calls can get very time sensitive, and it's very detrimental if it's just kind of sitting around not making its move. But what we can do by using or by selling one way out of the money, I know it doesn't seem like much, but what that does, it gives it more potential room for a gain, you know, because we have a lot more upside on that. But in fact, watch, this says unlimited upside. That will go forever. If we let it, it'd just go forever and ever and ever and ever and ever. But if we add this, it's going to cap the upside, but it gives us quite a bit of room, like 183, 185. Like if we had a long call, we'd probably be happy if the stock, you know, made it somewhere up in this ballpark up in here, you know, saying, okay, yeah, it's made a pretty good run, even got, you know, halfway through this. So somewhere in there. And so we're not going to be too greedy on that, but we're going to come in here and look at that, saying if we can get a chunk of that move, that'll be great. But by adding this second leg that we're selling, we're bringing in 230, so that's going to reduce the cost of it. But check this out. Check this out. That theta that was, what was it, $13 a day? $13 a day dropped down to $4.50 a day. That's a huge decrease in the theta loss, right? We're still delta positive on that. Now, the delta went from 35 down to about 20. So it's not quite as bullish, and that's because we do have that cap on that, but it's still primarily bullish, but we really removed a lot of the theta. The other thing that we actually did too is we made it less Vega sensitive, which is good too, because typically speaking, when the stock goes up, the Vega will tend to shrink because it's not as, if it moves up slowly, right? When stocks go down, you tend to see the Vega increase. And so this will help us make it less sensitive to Vega. It'll make it less sensitive to theta, and it makes it slightly less sensitive to delta, but that's okay because we're getting a big trade-off on that for the theta. And so I'm going to go ahead and send this off as a trade. Let's see. Can I do that as, it's not gonna, oh, let's see. I need to go back and create that. Didn't I have this over on the trade tab as one trade? I had a long call here. Let me add the other one. So we got the buy. Let me add the sell. Gotta get a few more strikes in there. Come on. Okay, there we go. No, wait. Which one are we missing? 43 days. 25. There we go. There it is. Okay, got it together. Good. Nope, nope. Hold on. Buy that. There we go. No. Let me just recreate this over here. Sorry. Want to buy the 155, right? So buy the 155, sell the 185. Sometimes it's good just to start it clean. There we go. And then we got the 564 debit. And so I'm just going to go with one of those. The risk on that trade, well, 564, it's whatever we're paying for it, right? confirm and send that off. And so I put two of those on that Oracle trade. And that's why I wanted to just kind of do one instead of like, fully max it out so we can kind of compare how these two played out. So a lot of action that we've added today. Looking at, you know, several trades, several charts. That's what I was saying. Last week we really didn't have anything that was setting up. This week there was a ton of potential paper trades out there that were setting up, and I wanted to take advantage of them. So I flew through them. So if you have questions, thoughts, concerns, do me a favor, put them in the chat on the comments for this class. And I read them each morning. I scan through the classes I teach, look for any comments, and respond to those comments. And so I'll be able to address it that way. Please fill out that survey. And then, if you haven't done so, if you are not a subscriber, please subscribe to the channel. It helps us create this wonderful content and get it out to you. It just helps us teach these every single week. All right, let me just make sure I'm not missing anything real quick. What is the impact of the 25 wide? And so, Greg, the impact of that 25 wide on that was basically taking advantage of a bigger move. And so if I just put it like $5 wide, then if it ran, we'd make max gain, but it really wouldn't be all that much. That trade there, we paid it was 25 wide minus what we paid for it, which is a little over $5. So our gain would be like 19, possibly about $19 on that. So much higher upside than like on the bull put we did. What was our gain? Like $2 versus $19. So, all right. So we got to wrap this up. Hey, there's a lot of good stuff in there. Hey, thank you so much for joining me today. I look forward to seeing you all next week. And again, got any comments, put them down there in the bottom of this video and we'll respond to them, and I'll see you all next week. Take care.